While Europe was being destroyed by war, one system quietly kept operating above it. All cities collapsed, borders shifted, armies advanced. But financial networks never stopped moving behind the chaos of battlefields. Another structure remained untouched and fully functional in Basel. Switzerland, a discrete institution, became the center of global wartime finance. It was called the Bank for International Settlements, known simply as the BIS, a central bank designed not for nations, but for other central banks themselves, a financial layer that sat above governments, wars, and even ideology. Its official purpose was coordination, but its real function went far beyond that. As bombs fell across Europe, gold continued arriving quietly into its vaults. Much of it came from territories under occupation, and military control assets were extracted, reclassified, and moved through invisible banking channels. Entire national reserves disappeared from their original systems without public trace. Victims of war had no access, no visibility, and no way to intervene. What was taken physically was reassembled financially inside institutional systems, and then redistributed through a network that crossed enemy lines without interruption. Even at the height of global conflict, the beast never closed its doors behind its walls. Delegates continued meeting in controlled silence. Bankers from Germany, Britain, and the United States operated in the same financial space. Men whose countries were at war still shared coordinated financial frameworks. Outside destruction, inside continuity and structured cooperation. This contradiction became one of the defining truths of wartime finance, because money does not behave like politics. It follows systems instead of flags. Financial flows adapted instantly to the existence of global conflict. Switzerland became the perfect neutral container for that system. Its geography acted like protection, shielding financial operations from external pressure. Mountains isolated it physically, while laws isolated it legally. Railways connected it to Europe while maintaining strict control of movement. Some shipments carried goods for war, industries, and reconstruction. Others carried gold, securities, and financial instruments of uncertain origin. Bars of gold arrived with erased identities and rewritten histories. Ownership was dissolved through institutional processing rather than legal ownership. The system absorbed everything, regardless of where it came from. War did not stop finance. It increased its complexity and volume. As borders hardened, financial routes became more creative and hidden. The beast acted as a coordination hub between national central banks. Even enemies required financial settlement mechanisms to survive economically. Trade, supply chains, and payments continued across hostile divisions. Ideology collapsed when confronted with logistical necessity. Behind public speeches, transactions kept moving quietly forward. No major economy fully disconnected from the system during the war, because complete financial isolation would have meant internal collapse. Global finance had already become structurally interconnected, and war only revealed how deep that interconnection really was. Even military economies depended on structured financial coordination. Armies required supply chains, and supply chains required payments. Under total war conditions, liquidity became as important as ammunition. The BI stood at the center of that invisible machinery, not as a political actor, but as a technical stabilizer of flows. Its meetings were quiet, procedural, and deliberately unpublicized. Records were minimal, and oversight was intentionally limited. Transparency was not part of its operational design, because visibility would have disrupted the system it maintained. As the war intensified, capital flows increased rather than decreased. Assets moved through protected corridors across multiple jurisdictions. Neutral banking structures absorbed pressure from all sides simultaneously. Switzerland reinforced its secrecy laws to protect financial confidentiality. This secrecy became one of the most valuable strategic tools in Europe. Other nations criticized it publicly while relying on it privately, because they had no alternative system capable of replacing it. This contradiction defined wartime financial reality. Completely moral boundaries existed politically, but not structurally. In finance, the system prioritized continuity over ideology at every stage. Even when global destruction reached its peak intensity, financial architecture remained stable and fully operational. It was already preparing for the post-war world while war was still ongoing, because the system was never designed to stop, only to continue, and what passed through it during war would shape everything after. When the war ended in 1945, Nothing about this structure actually disappeared. There was no collapse of the system that had survived the conflict. Instead, the architecture quietly reorganized itself around a new world order. The BIS remained fully operational in Basel without interruption. No shutdown, no reset, no institutional break occurred. Its role simply shifted from wartime coordination to post-war reconstruction. Europe was physically destroyed, but financially dependent on immediate stabilization. Entire economies needed liquidity, credit, and restored trust to function again, and the same institution that operated during war now provided that framework. Former enemy states suddenly found themselves inside shared financial systems. Cold War politics replaced open warfare, but financial continuity remained intact. The invisible networks built during conflict never stopped operating. Gold reserves were revalued, redistributed, and reintegrated into new systems. National economies were rebuilt through structured credit expansion. Debt became the foundation of post-war reconstruction across Europe. The system had not restarted. It had evolved continuously from wartime conditions. Switzerland preserved its neutral financial position without weakening it. Instead, secrecy laws were reinforced as global financial demand increased. Capital protection became a permanent institutional feature of the system. Offshore structures expanded globally as extensions of this model. Many of these frameworks were directly inspired by wartime financial necessity. The BIS became a coordination hub for modern central banking systems. Monetary authorities aligned policies indirectly through its structure. Financial decisions were synchronized without public oversight or debate. What began as wartime coordination gradually became global financial governance. The legacy of conflict transformed into the foundation of globalization. Control over capital flows became the real source of geopolitical influence. Information asymmetry became embedded into financial architecture itself. Insiders understood how the system worked in depth. Outsiders only saw results without seeing the mechanism behind them. Modern banking inherited this layered complexity directly from that era. Transparency decreased as structural sophistication increased. Speed of capital movement replaced traditional regulatory control. Interdependence replaced national independence in financial systems. The BIS model expanded silently into global institutional frameworks. It became a reference point for coordination between central banks, a governance layer operating above visible political structures. Financial crises reinforced its importance again and again. Each shock increased reliance on coordinated institutional response. Stability required deeper integration between global financial actors, and deeper integration increased systemic dependency further. The cycle reinforced itself across decades without interruption. The original wartime principle never disappeared from the system. Protect continuity above all other political or moral considerations. That logic remained embedded in financial decision-making structures. It simply evolved into the operating code of global finance. Power moved from visible authority into invisible coordination layers. The same mechanisms that survived war became the architecture of peace. Capital flows replaced military force as the primary instrument of influence. Institutions replaced armies as the core tools of global control, and continuity replaced victory as the real objective of power systems. The BIS remained at the center of that transformation, quiet, stable, and structurally indispensable to global finance. Its wartime function became the blueprint for modern economic order, a system born in conflict that never left its original logic behind, and still quietly determines how money moves across the world today.